In the rapidly shifting landscape of global finance, investors are facing a defining moment that is quietly reshaping the future of wealth creation. And this moment is being driven not by chance or speculation, but by a strategic pattern known as the smart money flow, a concept grounded in institutional intelligence, macroeconomic forecasting, data-driven modeling, and the collective behavior of high-net-worth investors who have historically been the earliest to identify transformative financial waves before they become mainstream. Today, this pattern is pointing toward a new era of investment opportunities emerging from a convergence of technology, digital assets, sustainable finance, decentralized infrastructures, and evolving consumer behavior, all of which are creating an unprecedented ecosystem that rewards foresight, adaptability, and value-driven decision-making. Smart money, defined as the capital controlled by major hedge funds, sovereign wealth funds, venture capital networks, private equity giants, and multinational investment institutions, has already begun repositioning itself away from conventional markets that have reached saturation and toward sectors with exponential growth potential, signaling a paradigm shift from traditional wealth-building models toward a more dynamic, tech-empowered, globally connected investment era. Over the last several years, smart money players have increased exposure to alternative assets, including private credit, tokenized real estate, AI-driven financial products, advanced robotics, biotech innovations, cyber resilience companies, high-performance cloud infrastructure, and blockchain-based financial systems that reduce operational friction and expand cross-border access to capital. This shift marks a transition from conventional passive investing toward active, strategic positioning where data, automation, and risk intelligence work together to drive returns far beyond what typical market cycles offer. A significant portion of institutional capital is now flowing into digital asset infrastructure, not limited to cryptocurrencies, but extended to blockchain validation networks, decentralized storage, tokenized commodities, programmable financial layers, and regulatory-compliant digital securities, because the smart money consensus views digital asset ecosystems not as speculative tools, but as the foundation of the next global financial architecture, comparable to how the internet transformed communication and commerce in the early 2000s. This belief is reinforced by the rapid institutional adoption of blockchain-based settlement systems, digital identity frameworks, and AI-powered risk engines designed to manage macro volatility with unprecedented accuracy. At the same time, smart money investors are pouring capital into the automation economy, where AI, robotics, and machine learning technologies are replacing outdated labor models and unlocking trillion-dollar efficiencies across manufacturing, logistics, security, healthcare, finance, and supply chain management, driving up productivity while reducing operational inefficiencies that previously suppressed profit margins. These innovators see automation not as a threat to employment, but as a necessary catalyst for global stability, especially as consumer demand accelerates and digital transformation becomes unavoidable for businesses that want to survive in the post-2025 economy. Moreover, sustainable finance, once considered a niche, has transformed into a dominant investment strategy, as institutions recognize that climate adaptation, renewable infrastructure, clean water innovation, sustainable agriculture, and carbon-neutral manufacturing solutions offer unparalleled long-term value and resilience, making them a central pillar for portfolios seeking predictable returns in an increasingly uncertain world. This momentum is also being fueled by governmental incentives, corporate responsibility frameworks, green bonds, and large-scale environmental technologies that promise both ethical impact and powerful financial performance. Beyond technology and sustainability, smart money is also flowing into demographic-driven sectors such as healthcare innovation, population aging solutions, telemedicine platforms, genetic engineering, and personalized medicine. Areas predicted to explode in value as global populations continue to age and demand personalized healthcare services designed for efficiency, accuracy, and convenience. This demographic wave is expected to become one of the most influential market forces of the next decade, pushing investors to prioritize early entry into biotech startups, longevity research companies, and digital health ecosystems. Additionally, real estate, one of the oldest and most stable wealth-building sectors, is undergoing a profound transformation as tokenized ownership fractional investment models, smart contracts, and AI-powered valuation platforms democratize access to high-value properties and reduce barriers that historically restricted participation to institutional players. With global migration patterns shifting, urban redesign accelerating, and remote work reshaping residential preferences, smart money investors are strategically targeting logistics hubs, data centers, co-living spaces, modular housing innovations, and hybrid commercial environments that reflect the new economic reality. Meanwhile, geopolitical uncertainty, currency instability, inflationary pressures, and shifting trade alliances have pushed smart money toward hard assets such as precious metals, strategic minerals, energy reserves, and agricultural commodities, reinforcing the time-tested strategy of diversification across both tangible and digital domains to maintain asset resilience in volatile markets. Private equity and venture capital firms are simultaneously expanding their influence by targeting early-stage startups in fintech, AI security, smart infrastructure, immersive digital experiences, augmented reality platforms, and educational technology sectors expected to define everyday life over the next decade as digital and physical worlds continue integrating at an accelerated pace. These firms are no longer simply betting on high-risk, high-reward ventures, but are carefully selecting founders and technologies with the potential to redefine industry standards, reshape business models, and influence global consumer behavior. Furthermore, smart money is increasingly embracing decentralized decision-making platforms, AI forecasting tools, sentiment analytics systems, and autonomous portfolio engines that can process millions of data points instantaneously, enabling investors to predict market movements with precision that far surpasses traditional models. This shift is creating an environment where speed, hyper-awareness, and algorithmic intelligence have become essential components of competitive investing, and those who fail to integrate technology into their strategies risk falling behind in a market that rewards innovation over tradition. As global economies transition toward hyperdigitalization, the next big investment wave is not merely a trend but an unavoidable evolution of financial systems, consumer behavior, and technological capabilities. And smart money is moving decisively toward sectors that offer exponential scalability, cross-border accessibility, long-term resilience, and transformative real-world impact. Whether it is the rise of digital currencies, tokenized assets, AI-led industries, sustainable technologies, or decentralized global markets, the emerging investment wave represents a rare moment in history when an imaginable opportunity aligns with unprecedented technological maturity, allowing investors to act early to position themselves not just for financial gains, but for generational wealth creation. Ultimately, following where smart money is flowing means understanding that the future of investment is no longer defined by passive observation, but by informed action, strategic diversification, and the ability to recognize that the forces shaping tomorrow's wealth landscape are already here, evolving rapidly, and waiting for those bold enough to embrace them.